All right, let's talk about something that's hiding in plain sight, an issue that's not getting nearly enough attention. We're calling it the 2026 policy time bomb, and believe me, its countdown has already started.
If you just glance at the headlines right now, everything looks, well, fine. The economy seems pretty stable, right? Markets are chugging along, and inflation, while it's still on our minds, seems to be cooling off. It really feels like we can all take a breath.
But here's the thing. That calm is a bit of an illusion. Because under the surface, there's this ticking clock, a policy time bomb, really, and it's set for 2026. And businesses? They're already feeling the tremors.
So, what exactly are we talking about here? We're calling it the scheduled collision. And that word scheduled is key. This isn't some random crisis popping up out of nowhere. No, this is something we can see coming from a mile away.
Think of a policy time bomb like this. It's basically procrastination, but on a massive national scale. It's what happens when tough decisions get kicked down the road again and again, until suddenly you hit a point where all the bills come due at the exact same time. And the consequences? Yeah, they're big, and they're unavoidable.
And for 2026, this collision is like a 3-car pileup. First, you've got a whole bunch of major tax laws that are just set to expire. Second, we have this messy, unresolved situation with trade and tariffs. And third, the backdrop for all of this is an incredibly polarized political scene where getting anything done is next to impossible. It is, well, a perfect storm.
Okay, let's dig into that. We'll start with the first trigger, and it's a big one, those looming tax expirations.
So remember those big tax cuts from back in 2017? Well, a lot of them are on a timer, and that timer runs out at the end of 2025. And we are not talking about minor tweaks here. This means higher income taxes for most people, smaller child tax credits, and some really big shifts in how businesses can write off their costs. Even the main corporate tax rate is suddenly a giant question mark.
And here's why that matters so much. For any business that's trying to make a 5-year plan, this much uncertainty is just paralyzing. It's like you're trying to sail a ship, but you have no idea where the rocks are. You just can't go full steam ahead.
Yeah, just put yourself in a CEO's shoes for a second. Are you going to greenlight that new factory? Or are you going to wait and see what happens with your tax bill? If you have no clue what your profits will look like after taxes, the only smart play is to wait. So you hold back on hiring, you pause big investments, and when thousands of businesses all do that at once, that puts a huge brake on the entire economy.
Okay, so that's taxes. Now, let's look at trigger number 2. This is all about something that was supposed to be temporary, but has kind of become a permanent headache. Tariffs.
A lot of these tariffs have been around for years now, and they're still here. What do? Well, they make it more expensive for American companies to buy the stuff they need to build things. And guess who ends up paying that extra cost? You got it. We do, every time we buy something. Plus, they mess with global supply chains, and the politics are so gridlocked that changing them feels, well, almost impossible.
There's a quote that just nails it. Tariffs function like a regressive tax, raising prices without raising wages. What does that actually mean? It means they're a hidden tax that hits lower and middle income families the hardest. Everyone pays the higher price, but it's a much bigger deal when your paycheck is smaller. So you've got this tax cliff on one side and trade friction on the other. But the real danger here isn't just one of these things, it's the combination. It's what happens when they mix together to create this massive cloud of uncertainty that leads to paralysis. It's like a chain reaction, right? You start with political gridlock. That creates policy uncertainty. Then businesses get spooked and they stop investing. And the end result? Slower growth for all of us. Economists have a term for this. They call it the confidence channel. And let's just say, right now, confidence is pretty shaky. And when businesses get defensive, what does that look like? Well, they start piling up cash instead of building a new facility. They bring on temps instead of hiring full-time staff. Or maybe they use their money to buy back stock instead of pouring it into R&D for the next big thing. And look, for one single company, that might make sense. But for the economy as a whole, it's really, really bad news. This gets at a really core idea we sometimes forget. The economy isn't just a spreadsheet. It's not a machine. It's a human system, and it runs on what we expect to happen. It runs on psychology. And if businesses expect nothing but chaos, higher taxes, and constant change, why would they take big risks? They won't.
And those risks are exactly where innovation and growth come from.
So let's circle back to 2026. Why that year? Why is it so critical? Because we're walking into this collision with basically no safety net. Our margin for error is razor thin. Just think about everything else that's going on. Public debt is already sky high. Interest payments on that debt are climbing, global trade relationships are tense, and our productivity growth has been kinda meh. Now imagine piling this huge policy mess on top of all of that. That's what makes this whole thing so incredibly risky. Okay, I know, this all sounds pretty bleak. So it begs the question, are we just doomed to watch this train wreck happen? Is this crisis unavoidable? Or can we actually do something about it? Well, here's the good news. Yes, we can. This bomb can absolutely be defused. It's not a lost cause. But it's going to take a very particular focus on one simple thing. And what is that one thing? It's not some radical new idea. It has nothing to do with left versus right politics. The solution is just clarity. That's it. Clarity, predictability, and stability. What the economy needs is actually pretty straightforward. Businesses need to know the rules of the game. They need tax policy decided early so they can plan. They need trade rules that are predictable. They need to see that there's some kind of long-term financial plan. At the end of the day, they just need a signal that stability is the goal. Because here's the secret. Businesses can adjust to almost anything as long as they know what it is. The one thing they cannot handle is a giant question mark.
So I'll leave you with this final thought. When we look ahead to 2026, the biggest risk isn't necessarily a recession or inflation or any one specific thing. The biggest risk is indecision. That's the real time bomb. And the clock is definitely ticking.